So does SIPC protect us against fraud if our brokerage breaks the law? Let's find out. Welcome back, Freedom Savers. So today we're talking about SIPC coverage, insurance, whatever you want to call it, protection that all brokerages that you invest in should have. And it is there to protect your assets when you invest with a broker. If the broker goes broke, there you go, broker broke. If the broker goes bankrupt, then SIPC should replace your securities and your cash. By default, it's supposed to protect securities and cash up to $500,000, and $250,000 of that can be in cash in the brokerage account. Now, I was researching a little bit on possible issues that you'd have with multiple brokerage accounts, because obviously I have multiple brokerage accounts with all the accounts I have. And while researching that, I ran across this scary article right here. And this is by a guy named Lawrence Kotlikoff, however I pronounce that. And he has an article here, Why No One Should Use Brokerage Accounts. And he has a very scary story here, talking about how SIPC's promise of protecting customers if their brokerage firm fails could be nothing farther from the truth. And he says that when brokerage accounts fail due to fraud, that the customers can actually be forced to pay back to SIPC appointed trustees huge amounts of money. And he goes on to tell the story of Frank and Sally, where their brokerage firm had been shut down due to fraud and they had no money left. And at first they were happy they weren't going to lose their investment because SIPC Protection should cover them. And then they learned the truth about SIPC Protection and that they actually owe SIPC $80,000 and will be sued if they don't pay. Now, this is how he claims that this works. When the brokerage firm steals your money, SIPC claims the firm went bankrupt, but since the broker was a crook, the customers are not entitled to any appreciation in their money, even though they paid taxes on that appreciation and would have earned similar returns in honest brokerages. Now, even though Frank and Sally knew nothing about the fraud, that doesn't matter. They're assumed to have known because they withdrew funds within 2 years of its discovery. So as a result, they're treated as if they are criminals and forced to pay back the money to SIPC. It says under current law, SIPC appointed trustee can only sue to recover withdrawals for the last 2 years. Thus, in Frank and Sally's case, they took out $80,000 in the past 2 years, so they owe $80,000. So basically what this article is saying is SIPC only protects you in the case of bankruptcy. It does not protect you if the brokerage is a fraud and steals your money and commits crime. And if they find out that it does commit fraud and you have withdrawn money within 2 years of them discovering that, then you owe them all the money that you withdrew. Now, whether this is a fact or not, I do not know. This guy has a few articles on this. This is one of the articles. The other article I ran across of his is this one. Says a huge SIPC risk your brokerage is not disclosing, and it's the same guy, Lawrence Kotlikoff, however you pronounce it, and he goes into the same details of how it doesn't protect you against fraud, and you could actually owe SIPC the money that you withdrew from your own account. So this is pretty scary stuff. I tried doing some research on this, and honestly, I don't know how true this is or whether it's not true. It very well could be. My point of this video is that when you invest with a brokerage, you probably should go into it understanding that SIPC Protection is in case the brokerage goes bust and ends up going bankrupt. I would not count on SIPC protecting you in the cases of fraud. Now, on that note, there are situations where SIPC has stepped in to assist in recovering funds that have been lost by fraud. Such case is the Madoff case. So it's been 10 years since the Madoff Recovery Initiative started. The Madoff Recovery Initiative was supported by SIPC. It just means that it backed the group and getting it going to recover the funds from the Madoff fraud. So here, the president chief CEO of SIPC said 10 years ago today, Bernie Madoff's fraud was uncovered. SIPC and the then newly appointed SIPA trustee, Irving Picard, along with his chief counsel, David Sheehan, launched the Madoff Recovery Initiative, which has since set new benchmarks for similar recovery efforts in the future. And this guy's whole article here is if They claim SIPC will protect you from fraud unless it's a Ponzi scheme. And he says that they, of course, can claim that any fraud is a Ponzi scheme and not pay you and actually have you owe them. So we go back here and we look at what SIPC did with Madoff fraud situation. And we find that SIPC did kick in and they funded an initiative. Now, mind you, by funding an initiative, it means that they're funding this initiative or this project to help recover all the securities and funds that were lost from the Madoff fraud. They are not replacing all those securities and funds directly. The majority of these funds were lost due to this fraud, and SIPC did not protect you and cover that. But they did fund an initiative to help recover the money for the investors. So SIPC does not actually protect you from fraud. And it is believable that if you withdrew within 2 years of a fraud being discovered, that they could sue you for the money you withdrew. I see that as a possibility. But everything I've read and everything I've researched on SIPC, nothing indicates it protects you against fraud. It only protects against bankruptcy and delinquencies of the broker. So keep that in mind when you invest. If you look over here on how SIPC protects you, this is one of SIPC's little brochures. It says they're here to help you. So when a brokerage is closed and customer assets are missing, SIPC steps in and within certain limits works to return customers' cash, stock, and other securities held at the firm. Although not every investor is protected by SIPC, no fewer than 99% of persons who are eligible, that's the key words, get back their investments. Not every investor and not every loss is protected by SIPC. This goes on to say what SIPC protects and what it does not. It says it protects if the firm is a SIPC member, the customer has securities at the brokerage, and the customer has cash, or the customer has cash in the brokerage firm in connection with the purchase of securities. It does not protect you if the firm is not actually a SIPC member. It does not protect against market loss, of course. So if you invest in Apple and Apple stock goes down, it's not going to protect you. Promises of investment performance. So if your broker says, hey, we guarantee you're going to get a 10% return and you don't, they do not cover you for that, and you really shouldn't fall for that anyway. And it does not protect commodities or futures contracts except under certain conditions. Also, if your broker does go bankrupt, the time frame between when it goes bankrupt and SIPC restores your securities and stuff, your securities value could drop as the market does fluctuate. They do not protect you against that. They only replace the actual shares that you owned and the funds in your account. When does SIPC get involved? When a SIPC member brokerage firm fails and owes customers cash and securities that are missing from their accounts, SIPC receives a referral from the U.S. Securities and Exchange Commission, or the SEC, or the Financial Industries Regulatory Authority, FINRA. With this referral, and if grounds exist to start a liquidation, SIPC may ask a federal court to appoint a trustee to liquidate the firm for the protection of the customers. With smaller brokerage firm failures, SIPC sometimes deals directly with the customers in an out-of-court direct payment procedure. They protect up to $500,000 for securities, which are your shares of companies. The $500,000 limit includes up to $250,000 for cash. We'll get into this multiple account thing and how they treat those when a brokerage is liquidated. Down here on the bottom of this brochure, the last page, it says avoid investment fraud. This is the only place fraud is actually mentioned. It says it urges all investors to understand the dangers of investment fraud. Brokers are required to issue confirmations of trades and account statements at appropriate intervals. You should always review those and verify that they're correct. If you discover an error, you should immediately contact your brokerage in writing. Unless you complain in writing, your eligibility for SIPC protection may be compromised. This is the only place where it mentions it may help you in fraud. If you do not receive timely trade confirmations, you should also bring that to the attention of your brokerage firm and complain in writing as well. And then it gives you some resources. Below are some resources on investment fraud and where to turn for help. So notice that SIPC is not one of your contacts here. This again leads me to believe that they are not really there to protect you against fraud. They may assist with that, but they are not there to protect you against fraud. They're there to protect your securities in the case of financial failure of the brokerage. Now let's look at if you have multiple accounts. So if you have multiple brokerage accounts, what they do when they liquidate a brokerage to get your securities and money back, they compile the types of accounts. So basically, if you have 5 different individual accounts, like I have with M1, if M1 was to go bankrupt and I had 200,000 in one, 100,000 in another, and 600,000 in another, only 500,000 combined would actually be covered and protected. I would lose the rest. Basically, it separates accounts into these groups: individual accounts, joint accounts, accounts for corporations, accounts for trusts, individual retirement accounts, which a Roth individual retirement account should be combined with that, accounts held by an executor for an estate, and accounts held by a guardian for a ward or minor. So basically, it'll combine all individual accounts and protect up to 500,000, all joint accounts protect up to 500,000, and all IRAs protect up to 500,000. So if you have multiples of those, the total combined value, anything over 500,000, would not be protected. So just something to keep in mind. On their website, protect yourself against fraud. Again, it doesn't say that they protect you against fraud. It just says make sure that you get everything in writing, and then gives you some more information about where to go. Same thing on the fraud alerts page here. It talks about the customer protect entity. It talks about impersonation of legitimate companies. It talks about the misuse of SIPC's name. In other words, brokerages claiming to be members of SIPC that are not. There is a list of all SIPC members on SIPC's website at www.sipc.org. And you can search for any of them. So like M1, I can do M1, and we can find out if M1 Finance is a SIPC member. Boom, M1 Finance LLC. I know a lot of you are also invested with Robinhood. Robinhood Securities in Florida and California are both members of SIPC. What was the other one? Webull Financial, member of SIPC. So this is where you can come to confirm that your brokerage is a member of SIPC. This is just another website I ran across. This is another, I'm assuming, brokerage. I don't know. I don't deal with these people. I do not promote these people. This is just a website I ran across, and I thought this was a great description of what the SIPC was, so I'm including it here. SIPC was created in 1970 as a non-profit, non-government membership corporation funded by member broker dealers, so it's funded by the brokers. Its primary role is to return funds and securities to investors if the broker dealer holding their assets fails financially. SIPC does not reimburse customers for market loss, investment fraud, or worthless securities. Instead, it steps in to help individuals whose money, stocks, and other securities are at risk when a broker-dealer files for bankruptcy or becomes insolvent. So this statement clarifies a little more that they do not cover investment fraud. And then you go to SIPC's website and you click what is SIPC, and again you go through here real fast. It tells you it protects up to the amounts. How does it work? It's only available if your firm fails and SIPC steps in. You must file a claim to receive the protection of SIPC. So if your brokerage does fail, you will be required to file your own claim for this. And again, it shows what it does protect, it does not protect, and it does not mention fraud in either one. Tells you can go to their member site and check the list to make sure they're a member of SIPC, and tells you how to contact them if you have any questions. So to close this video out, I just want to provide some information about SIPC, what it is, what it protects you from, what it does not protect you from. And at this point, I would say it does not protect you from fraud. It may step in and assist in recovering your securities and funds in the situation of fraud, such as the Madoff fraud situation, but it is not liable to replace your securities and funds in the case of fraud. It only is liable for that in the case of your brokerage going bankrupt. That's when it steps in, liquidates the brokerage, and replaces all of your securities and money. So hopefully this information helps you and gives you more idea of what SIPC protection is and what it is not. So I hope that helped, guys. Hope you're all doing well. Hope your portfolios are rocking and making tons of money for you. Have a good one. All right, guys. Thanks for watching. I appreciate it. Be sure to hit that subscribe button down below. And if you liked the video, hit that like button for me. If you want to hear any specific type of information, anything that you're interested in, you have any questions, just drop me a comment down below. Let me know what you think. Let me know your opinions on this video or any other video I've made. And if you know anyone else that might be interested in this video, please be sure to share it on your social media and share the knowledge. Thanks, guys.